Hey guys, what's up? This is Francisco with Valorizo Capital, and today we're doing the market update video for the week. I know that I didn't post any videos in the past 2 weeks. I have been doing some changes here in my setup. My strategy continues to be the same, but I was doing some adjustments in my indicators. You know that for you that have been following for the last couple of months since I started this YouTube channel, you know that I use two main indicators. I use the TTM squeeze developed by John Carter, and I introduced the trend oscillator developed by Sam Shames into my system, and I have been finding some incredible results. And I actually did some little adjustments in the time frame of the indicator that actually fits with the daily time frame that I have for my setup. And the results in the last couple of weeks have been actually outstanding. They're incredible, and I'm extremely happy to share this with you. And that way, I can give you guys a better analysis, a more accurate analysis. Of course, everything is based on probabilities, and that's the most important thing, to understand that the market is about probabilities, and there is not a perfect indicator. But I have found that this indicator has a really high rate of success, and I'm pretty excited to share it with you in the analysis that we're going to do. So stick around for the video. We're going to go through the indexes. We're going to take a look at the major ETFs, some of the ETFs that I'm looking for the week. And then, of course, later I'm going to post the weekly watch list video. And I'm also going to go through a little bit through the process that I use to screen for the stocks that I'm going to trade. And I have found that the less stocks that I watch, the better that I execute them. And that is an amazing thing, because I have more time for me, for my reading, and for my life in general. So let's just start with it, guys. As you can see here in my screens, I have the chart of the ISIC, which is the Nasdaq Composite in the market. And you can see I have a couple of things going on here. I usually take the drawings out when I'm doing the video for you, but this time I prefer to leave the drawings on, because I think that there's a lot of information that you can find in the lines that I draw in the that I draw in the chart. And also you can understand how I use Fibonacci, and also how I use the swing levels that I also have on my charts. So first of all, let's go back here. We have the Nasdaq Composite, and you can see pretty strong move. You can see right, the first indicator that I have the squeeze indicator developed by John Carter, and this is basically to find moments of compression in relation with the Bollinger Bands and the Kellner channels. And then on top, I have the trend oscillator, which is basically a momentum indicator. And that way I can identify the trend sometimes way before it starts trending, which is actually pretty amazing. And then everything else comes back down to risk management and that stuff. And then I usually take a look at volume, but I have found that the most important thing is trend. Volume is amazing. When you have volume, you have a little bit more of confirmation, but the most important thing is, I will say, that is trend and momentum. Volume usually shows up a little bit later, or sometimes it doesn't show up, but the momentum continues to show, and that continues to show with the trend, and that's everything that we need to make money. So back to the chart. You can see that we have the Nasdaq Composite. You can see that the trend oscillator right here, we actually found support this day right here in the EMA. And then after that, we found support right here again. And then we found support right here again. And then we had a really strong move all the way to the upside. And this is kind of the move that everyone is talking about. And what I found pretty interesting is that the trend oscillator, you can see that we found support somewhere around that midline, which is this blue line right here. And we basically move above the 50 daily moving average, which is the purple line. And then we found support and had a really strong move to the upside. Now, we are currently extended. And let me just take this. I'm just going to take the quant pivots out of the screen. That way we can see this a little bit better. You can see that we are extended right now. We're trading above that daily 2 ATR. You can see the green lines that I have here are basically just 2 ATRs away from the mean. And what I use for the mean is actually the 21 exponential moving average. So this basically means that we have kind of a 2 standard deviation move away from that 21 exponential moving average. And usually when we are extended, a little bit extended farther than that 2 the two ATR, we usually have a strong move back to the mean. As you can see, we have them in the past. So right now, what I'm expecting in the market, I'm just expecting for a pullback, and you can see here that I have the 0618 retracement measuring using Fibonacci retracements, and I measure this move from this low right here into this top, and I'm expecting a pullback somewhere around this breakout level, which is gonna come somewhere near the 21 exponential moving average and the 0618. That doesn't mean that the market cannot continue higher, but based on probabilities and based on my system, I'm gonna wait for a pullback to that 21 exponential moving average, and then I'm gonna be looking for this trend oscillator to continue to trend above the green line, and that will be basically a buy the dip opportunity for my system. Now let's continue to move into the next ETF that I want to discuss, and this is the SPY. And you can see all the lines that I have here. You see that I don't have any colors on my candles, and the reason that I don't have any colors in my candles is because I only care about momentum and trend. I don't care if we have a red day or a green day. I think that that plays a lot of games with your psychology, and that's why I just have my candles black, because I'm just looking at momentum and trend. That's everything that I care about, and I'm looking at those exponential moving average and those simple daily moving averages, and that's everything that I'm look at. For me, the most simple my system is, the better I execute it. So you can see the SPY, same story. You can see that the trend oscillator is starting to find support here, started to find support here. And then after that, we have a strong move above that 50. Then we retested the 50, and then we have the strong move. You can see that we had the squeeze, but right now we are extended into that +2 ATR. Now, same as the Nasdaq Composite, I made a measurement for Fibonacci right here, and I'm looking for a retracement. I'm looking for a retrace, right, for a pullback down into that 618, which coincides with that 21 exponential moving average, and also with this breakout level right here. So now let's take a look at the QQQ, and you can see that my analysis, it tends to be pretty simple. And these lines, basically just these lines that I have here with the dots, they're basically lines that just represent gaps, open gaps that we have in price. So you can see that we have a gap open right here. So that's the way how I monitor and look for those gaps in the recent price action. Now, going back to the charts, you can see right here how these play beautifully, right? The trend oscillator, right? We have a dip right here. We had a dip right here. And then we had the move that I call, which is, this move is what I call a change in character, because we move above that 50 daily moving average. We move to that +2 ATR. We pull back to the mean. The trend oscillator came into that EMA, price came into that 21 exponential moving average and that 50. And now we have a strong move that is now extended. And I'm going to be looking for a retracement, right? Measure from here to here. We have the 0618, basically a pullback back down to that breakout level and that 21 exponential moving average. But this one is looking pretty nicely, and I think that will also be a buy the dip opportunity. Now let's go back. Let's take a look right here. Let me take a look. Right here we have the DIA, and this one is kind of lagging, right? We didn't have such a strong move as we had in the other indexes. But you can see here, right, we have kind of the pullback. We actually had kind of a double bottom right here, and then we had the breakout somewhere out here from the neckline. Well, you can call it kind of an inverse shoulders with these ones, kind of an inverse shoulders. Maybe we have the neckline right here. You can look for the patterns, right? Everything to justify your position. But what I'm thinking here, right, we have kind of a double bottom. We kind of had a breakout here, and then we have a strong move to the upside. We have the squeeze. I'm not much interested in the DIA. I think it's lagging, but of course we also have a level right here. We have the 21 exponential moving average, also with the 0618. So maybe we're going to see a pullback here before we see another move in order to test this level here. And we also have another retracement here measured from the high of the past move. Let me just show you pretty quickly. This retracement is just measured from this high right here into this low right here, and then we have the retracement coming here. So I think that there's a strong possibility that the DIA is going to test that level before stalling again. Perhaps we're going to break from this flag, or maybe we're going to pull back, before we make that continuation move into the upside. So that's one for the DIA, and then let's just check the IWM, which is which I think is the index that is actually leading the market here. And you can see right here, this is actually pretty really amazing as well. You can see that the EMA in the trend oscillator acted as support. We had support in price. You can see that we actually was supported by this swing level right here. Then we had the squeeze, pretty strong move to the upside, close to that plus 2 ATR, pull back into the 8, and then we had a strong move to the upside. You can see that we are testing this level right here, and we are also extended into that plus 2 ATR level. And if we make a Fibonacci measurement from the last swing to this swing right here, we're coming somewhere around the 0618 level. So that one is also looking pretty interesting. And if you're asking for why do I have these lines, these blue lines right here, basically these are just zigzag lines. That way I can identify price structure by looking at pretty quickly. So that's kind of the IWM. And if we look at the IWO, it actually looks the same. So there's not much to say here. The only thing is that the IWO, I think that is breaking a little bit before the IWM. And this one is actually looking pretty strong. But of course, as always, in my system, I always prefer to buy pullbacks in the indexes. So now let's take a quick look at the VIX. First, let's take a quick look at ARC, which I think is setting up for a pretty strong move to the upside, right? You can see right here, ARC, if you just take a quick look at this looks like a pretty strong base, and you can see that we continue to make higher lows, as well as higher highs. So I expect this to continue, and I will expect that the 21, right, you can see that we broke above that 50 daily moving average, 50 daily moving average hold, 50 daily moving average hold, and then I'm looking for that 21 exponential moving average to act as support this time. Now, I also have a measurement, right? If you measure this level to this level, you will find a 0618 retracement coming right into this breakout level, and also that 21 exponential moving average. And I think that that will be an opportunity before we make a strong move into 53. And I think that will provide a really high probability trade in ARC. And now to end this video, let's take a quick look at VIX, and then we're going to take a quick look at a UBXY. You can see the VIX right here, and the reason that I have this line right here, because this was the moment that the trend oscillator broke below the EMA and also broke below that 50 line, and also broke below that 50 daily moving average. And you can see some people say that you cannot chart the VIX, but I always chart it, and I have found a lot of success doing it. You can see right here that the 50 daily moving average acted as resistance. The 50 daily moving average acted as resistance here. You can see that the trend oscillator continues to trend to the downside, and we continue to make lower lows and lower highs as well. But what I found interesting, I think that the VIX right now is a little bit extended, as well as the market. And we're going to see, right? Are we going to get a move into that 21 exponential moving average? I don't know. But I did make a Fibonacci extension from this high to this low. And you can see that I have the extension, the 1.272 extension. And I think that there's a chance that we're going to get another move like this one into that 50, into that daily 50. And I think that that is going to be an opportunity to buy the dip in the market, or perhaps even short the UBXY, and then look for this to continue lower and the markets to continue higher into the end of the month. And then we can also take a look at the UBXY, but UBXY is going to look pretty similar to VIX. You can see right here, I have the red line, which meant that we broke below that daily 50 moving average, and we also broke below the EMA and the midline. And you can see that this one has been finding resistance right here into the 21 exponential moving average. And if you do an extension, you're going to find that the 1.72 extension comes somewhere near that 21 exponential moving average. So my current outlook in the market is pretty simple. I think that we are going to continue higher into the end of the month. Probably even into September. We might just continue higher without, right, maybe with no pullback. You can see that when we have bear markets, and we continue to be in a bear market technically, based on the position of the 30-week and the stage analysis by Stan Weinstein, we continue to be in a bear market, but the rallies into the bear market tend to be really strong and really fast. So we might just continue to move higher, but my expectation and the way that I trade the markets and the way that I have found a lot of success is by buying pullbacks or by selling rips. So I'm gonna wait for a pullback. I'm gonna be You already know the levels that I'm going to be looking at, basically just looking for a reversion back to the mean in the indexes. And then after having that reversion back to the mean in the indexes, I'm going to use my watch list, and then I'm going to position myself in the best looking stocks, or perhaps into high leverage products for the ETFs, such as the TQQQ or the UPRO, and all that kind of amazing things that we have to trade. So thank you so much, guys, for watching. Thank you so much. Thank you so much also for your patience, because I haven't posted in the last few weeks. Thank you also for the new subscribers, and also remember to take a look at my Twitter account, which I usually share the setups on a daily basis with my comments, and that way we can track the market together. So thank you so much, guys, for watching. Take care, and I wish you the best of luck I wish you the best of luck for next week. Thank you. Peace. Bye bye.